Hey, everybody, welcome to another episode of Eggs. I'm Ryan, he's Mike, as you know, and today we're joined by Kelly and Jordan Buttars and CJ Wilkinson. CJ is with Academy Mortgage in Salt Lake City, and Jordan and Kelly, don't let me mess this up. So it's Probe Realtors, but what's the team moving the market?
Team moving the market at Probe Realtors.
Excellent. So these guys are our local real estate agents. Actually, the way we came to know them, both CJ and Jordan have been helping me in trying to buy a house myself here in the Salt Lake area after relocating to Salt Lake. And, unfortunately, we haven't managed to pull it off just yet, but we'll get there. And but these are basically our guys. And so the way we started talking or getting this conversation going is basically we had started talking to these guys years ago about a house. And then when that sort of fell through, when we weren't ready for it and needed a little bit more time, we just sort of fell out of contact for a little bit. And so here in the not too distant future, in fact, December 11th, at Access Salt Lake, which is the home to Access Studios where we live, we're holding an event for realtors and real estate agents interested in podcasting and other tools for marketing and growing their businesses. And basically, I reached out to Jordan to see if he'd be interested in being a part of it and being the host of this event because we needed somebody. And luckily he was kind enough to do it and rope his wife into it as well, who has more than 18 years in the business. So between the two of them, I think we're going to be pretty well set. So that event, December 11th, right?
Yep.
12 to 1.
12 to 1, and it's podcasting for your brand reputation and your bottom line.
Yeah, and we'll probably have a live stream or something to go along with it as well. If not, we'll make the tape available when it is. So with all that blah, blah, blah out there, let's go ahead and turn the attention to the men and women of the hour, Jordan, Kelly, and CJ. Welcome to the show.
Thanks for having us.
Thank you.
Yeah, of course. So as I said, I mean, so we have kind of some history, especially Jordan, CJ, and I. It took a little jogging for CJ to catch up, but I think we're all back on the same page now. So I know you guys just as realtors, but let's talk a little bit about how you guys got into the business, and what you guys do. Let's talk about your company, what you guys actually do for a living.
Okay, I think the founding grandmother of this whole thing is Kelly.
Grandmother.
I know,
sure
right?
I
don't know
quite yet, but yeah. So CJ and I are actually brother and sister, and we come from a real estate family. Safe to say that because our grandfather was in real estate. My dad has been in real estate over 40 years.
Yeah.
We lose
the year 1985.
1985. Yeah. So
Oh, wow.
we've lost track, but he's been in real estate for a long time. And I went to school down at BYU and was really involved in marketing and loved my marketing degree or getting a marketing degree there. And while I was there, we needed to do an internship that summer. And I had just come back from BYU, Hawaii, and just...
Of course, you had to go to Hawaii.
Yeah,
right?
well, yeah,
I mean, if you have your options,
right?
I recommend anybody do that. So once I got back, I was needing to do this internship as part of my business, being in the business school. And I was talking to my dad one day and he says, "Hey, Kelly, why don't you do an internship with me this summer? I've got, lots of homes to sell. Builders are building a lot of homes and I'm going to need people to sit open houses and to help me this summer." So actually me and my sister decided to go and sign up down at Stringham Real Estate School. And we went ahead and got our real estate license. Back then you couldn't do anything online. You had to actually sit through the classes, which was good. But we learned a lot and we just jumped right on board with real estate that summer. I sat in a lot of open houses and learned the business from my dad. But actually, I had actually started in real estate way before that. I started when I was 15 years old at his office, as a secretary, as his secretary, and he paid me well, so I stuck around, and I did that for several years during the summers. So I really got to learn a lot from watching other agents, from watching him. And so by the time it was my turn to be licensed and get out there, I had a pretty good knowledge and, of course, great mentors. And I think that was when we'll let CJ tell the story of how he got into his business in a minute. But Jordan, we ended up forming a team, and you can kind of tell us how that happened.
So Kelly and I have been married about 12 years. And when we first got married, she wanted to recruit me as an agent. At the time, I wasn't really interested because I was in college. I wanted to blaze my own path. I had a mindset of maybe doing pharmaceutical sales, being one of those sales reps that just, would go to jazz games and schmooze people and go to
Yeah, that sounds like
lunches.
a good gig, right?
Right, get paid a lot of money and basically just have a lot of fun. Well, I graduated in 2008 when the economy just tanked. And so basically, I was unemployed. I was playing Mr. Mom. We had our first kid. And I was playing Mr. Mom while Kelly did real estate. And so I jumped around from job to job and, laid off multiple times. Decided to go into management. And from then, the economy started to change. I had a lot of friends and a lot of sphere of influence that I was around that were looking to buy homes. So I would basically send them to Kelly. And she was getting pretty busy with real estate. And so it just kind of
first child.
finally clicked in my brain saying, hey, you should do this. You have a lot of people asking about real estate. They knew Kelly was doing real estate.
So were you still working under your dad at the time, or did you?
Yeah, I was. And actually what got us through that tough economy was I ended up getting involved with a loan servicing company. So I was being given a lot of foreclosures homes to list. So it was a good time to learn about foreclosures and such, but not a good time for Jordan to enter the market. So despite me pushing him, I'm glad that he didn't decide to become a realtor at that point, but rather when he did jump into real estate, we were just starting to see the recovery from that 2009 basic real estate crisis, basically. So it was good timing in the end, looking back.
Yeah, so I've been professionally licensed for about 6 years.
Nice.
So Kelly and I decided to team it up. We work really well together as far as work wise. Everything else in life, we we clash, of course, but for some reason, working together in real estate has worked really well.
Yeah, and we just moved forward with really branding ourselves as a team, and teams really have just come into real estate in the last little while. And we thought, what better than just to be a team together and serve our clients together. So now I focus a lot on the marketing with my marketing background. That's really what I enjoy in real estate. And I'm able to stay home with my family and with my kids while he's out and about and showing homes and doing more of the stuff that requires you to be outside of the home. So it's been a good partnership.
That's awesome.
Yeah, that's great. Well, then let's transition to CJ and let's talk a little bit about how you came to the picture. So CJ works for a mortgage company, so it's obviously a natural fit that you guys might work together. Also, the family relationship and everything makes it pretty, kismety or pretty natural fit. But but let's talk about your angle here.
Well, it's funny how I was studying economics at Utah State. So 2005, going to Utah State University studying economics, I really liked learning about economies and the markets, and I felt like economics was something that's really practical that you could actually apply to your life, interest rates, the Fed. So I immediately related that to real estate because I grew up in a real estate family, and I remember walking up to Kelly and saying, "Kelly, I think I know what I want to do." I'm about 3 years younger than her, right? So I launched a little later, but I said, I think I want to get into real estate. I want to sell real estate too.
She's like, no, you don't. No, you don't.
Exactly. That's exactly what she
At which point I said, there is no room for you in real estate, but.
Right. So she says, yeah, there's no room for any more realtors in this family, but you could do mortgages. And then, people we work with, we could refer to you. And I said, well, that's cool. What's a mortgage? I was still living at home, pretty young, 22 maybe at the time, 21.
Yeah. And I actually, for a short time while I was in college, joined up with a brokerage, loan brokerage, and started doing some loan processing, which ended up being a good background for real estate. But also I was able to give CJ a little clue into what mortgages are and how they work.
It's also beneficial to learn that stuff as a real estate agent because you learn the process of, we can't write the loan because his back porch is about to fall off the house, that kind of stuff.
Exactly.
For sure. So I found, Kelly actually found a little newspaper ad that said mortgage licensing boot camp, 8 days, 8 hours a day, because you didn't have it online then either.
Yeah, I'd forgotten about that.
I sat through a course that it was actually held at Republic Mortgage. So I got licensed and started doing it. I started working at Republic Mortgage. And then I immediately got recruited over to Countrywide Home Loans. Countrywide was the big deal big growing company, really easy to get loans. So a lot of loan officers went to Countrywide. And then if anybody kind of remembers the history of Countrywide, they tanked hard in the recession. They got bought by Bank of America. They bought Countrywide for like $4 a share, and this big deal. And so I was with Bank of America for about 4 or 5 years after they bought Countrywide, and I did that until 2011. And then, in my opinion, Bank of America they started having some pretty big struggles. They kind of bit off more than they could chew with Countrywide. They kind of inherited some problems there. So I made the shift from the big banking world, Bank of America, to Academy Mortgage, which is actually what's called a correspondent lender. We're just do mortgages, and I did that in 2011. I've been there ever since, and I like to.
Is it more of a smaller family environment kind of thing, or is it?
Yeah, compared to Bank of America, it is, but it's in about 40 some odd states. It started in Utah. We're I think we're in the top 10 lenders in the nation.
Nice.
Oh, wow.
So we're pretty big, but we're not so big that we can't make sense out of things, and we don't forget who our customers are, that type of stuff.
And your underwriter is sitting right next to you most of the time, right?
She's 10 feet away from me. I mean,
that's handy.
It's awesome. So great company to be at, and been doing loans now for about 13 years, since 2005.
So you've been through the recession. You like 13 years. Didn't it start going down around 2008?
Right.
Yep, exactly.
Okay.
Summer of 2007, I remember having a meeting at Countrywide.
Yeah. With
my branch manager, and he started saying, "Hey, things are changing. Some big news broke. Things are going to scale back. Loans are going to get harder." I remember that conversation. And he said, this happens from time to time in the industry. After a few months, it's going to be fine.
Well, a few things changed when that happened. I remember so I was a loan officer for a little while.
Oh, cool.
Not legit. Not like I didn't go through any boot camp. I replied to an ad on the newspaper. It was more like a sales position, really. Okay. And I was working for a lending company called ESP Mortgage out of Phoenix. And I showed up, and that day he had me cold calling people for VHA and FHA loans. And I had zero training, zero nothing. And I'm probably the reason for the collapse.
People like
companies like that. I didn't know what I was doing. I didn't know any rules, regulations, any of the stuff like that. I kind of learned it over the years. But back then, you could work with your appraiser. You had direct contact with your appraiser. You could do all sorts of stuff that you can't do now. And they distance you, right? You can't even communicate with the appraisal company anymore, right?
Right.
So,
it's called Home Valuation Code of Conduct laws that came in.
And that all came into effect because of the crash, right? Exactly. And I don't think they could just throw an ad in the newspaper and hire random people to be loan officers without training anymore. I think that's pretty much the way of the past.
Right. There's a lot more education required. Licensing, you have to register with what's called an NMLS, which came about through the recession, National Mortgage Licensing Registry. And then there's a lot more regulation, like the Dodd-Frank Act 2010, those types of things that have made it a little harder to get into, a little harder to do, but probably good for the consumer.
It is 100%. I feel bad for my role in that because I didn't know what I was doing. I didn't know, the effect of my actions, but or the company's actions, because it's very apparent now looking back and seeing, all the just the, at the time that I was doing it, we were bringing people from, like an 8% loan down to the 5s and the 4s and the 4.5s when, everyone wanted to refi and just get out of their higher interest loans. And, we focused mainly on the FHA and VA, and the subprime lending was, it was amazing how you could do zero doc, all this crazy stuff like stated income, all that stuff, and get away with it. It was insanity.
I processed those loans.
Right?
Oh yeah.
So I'm glad that there's been some sort of reform, because it was the Wild West. It was crazy. So
I'll tell you a lot. It's a lot harder to get a house now.
Sorry.
Yeah.
But how did that, so on the lending side, the change kind of affected that. How did that affect you guys in the real estate world, being the actual realtors?
Yeah, well, I was actually listening to a real estate podcast just the other day, and there was an agent on there that had started in his teens and was now in his 50s, and he was talking about how just the change in mentality from back then to today. Speaking mostly, he was talking about days on market. The gentleman hosting the podcast had asked him what he thought, where he thought the market was going, and he talked about our generation being just fast. Everybody wants everything now. They want it fast. They want things to happen quickly, and they're used to things happening quickly. I mean, we have houses now selling in days, maybe even hours. But back then, he said, I would send out a postcard if I sold a home in 60 days, and that's just people. You tell people that homes took 60 days to sell, and they're going, what?
Is that just this market in general, or is that just nationwide?
This
really?
is nationwide, but yeah, and the reality was homes were taking 6 months or more to sell. That was an average days on market during that time. And a lot of foreclosures. I sat at the closing table with a lot of sad situations, people losing their homes to short sales and foreclosures, and people just got scared. People were short selling their home. They just didn't like that feeling of being in negative equity. So things were really different back then. And I felt lucky to have gotten associated with a bank, so I could sell some foreclosures, even though it was a tough gig. And then I did that loan processing kind of on the side in college too. So I was writing or watching loan officers write some of those bad loans, and then years later, helping people who had those types of loans to short sell and watch them being foreclosed on. So it was tough to watch that, but I think if anything, I gained an appreciation for just some of the new regulations, even though once the market did start to recover, working with CJ, we had a tough time in the beginning as the recovery was happening, getting people approved because the regulations were so tight. So things have loosened up. Do you agree, CJ?
Yeah,
but they're still at a good,
as far as guidelines go.
Yeah, guidelines.
Yeah, they've slowly loosened up over the years.
Yeah,
they're still tighter. I mean, there's not.
We'll never be the same, and none of those loans won't ever probably exist again.
The stated income loans,
stuff. I did a stated income loan myself, and all I had to do was hand CJ my driver's license, and that was about it.
That's pretty crazy.
And there's some stated income stuff now, like through private investors, but they're 50% down and 9% interest rates, right? So it's not through Fannie Mae
to get
where
your
you
run
got
of the mill,
you got the good deal
or whatever.
Right.
Yeah. No, my in-laws did one of the adjustable rate mortgages and got caught up in that thing when it jumped to like 22% or something on it.
Yeah.
$350,000 house with zero down. And then it jumped to like this insane rate.
So it used to, some mortgages could have they could have an adjustable rate. They could be interest only. You obtain them through stated income.
Reverse mortgage.
They have a teaser rate, right? So where you get this really low rate for the first month. I don't know what the point of having a rate for a month. Yeah, 1% for a month, and then it goes negative amortization. I mean, they were
getting
gnarly.
Really creative.
They were really gnarly, and that stuff. They had 40-year amortizations. They don't do 40 years anymore. Interest only is really only on like second mortgages and things like that. So,
yep. Back before I got my real estate license back in 2008, during the dark times, supporting Kelli in real estate. I remember driving her to a house. Little innocent old Kelli, who wouldn't hurt a fly.
old in there.
And she would have to go knock on the door of the homeowner and say, "You need to be out by this day."
How is that your responsibility?
Here's $1,000.
That came into question years later why agents were having to do that, but that's the reality of what it was.
So you were representing
didn't have time, and we just that on top of all our other responsibilities was to go get the people out.
Basically kick them out, give them a little bit of incentive not to damage the house as they moved. And so, sitting there in the car multiple times.
It was the Cash for Keys program is basically what it was called.
Yeah. So just kind of sitting there from that time to slowly it reversing back into a positive market.
Oh.
And I'll look back at my Facebook posts 5 or 6 years ago and saying, prices are low, get in now. They're going up, but nobody would buy. Everybody was super hesitant. And those that did, I had a investor who just was buying. He had gotten some money from an inheritance and was buying these condos, $90,000, which are now worth, I think the last time I looked, those condos are approaching $235,000. So he was brave enough to buy, but a lot of people were afraid to buy, and it took a long time to get to where we were at, but all of a sudden we're here.
Do you think?
Go ahead.
Oh, sorry. I was going to say, do you think that the influx of technology in the area is kind of helping with that?
I think it's helping in the sense that there's a lot of real money flowing in the economy now. And I think it's come from technology enabling people to make money. You look at the, podcasting, blogging, all of those avenues that weren't there back when I started in real estate. It's allowing a lot of people who maybe weren't making an income or weren't making as much to now take their businesses to new heights. So I feel like there's a lot of real money flowing in the economy before, whereas before I felt like it was the illusion of money. Those loans, people felt like they had money, but it was borrowed money. That's just my own philosophy. But I do think technology has helped people in general. It's improved our economy. In terms of real estate, it's created a big transition for realtors like me who grew up in the non-digital age to change our business and to find new ways of marketing and to find out what the consumer wants. I go back to the generation wanting everything now, and there's a lot of real estate companies that offer that. They'll just give you an offer, and you take it or leave it, and you don't have to do much. But we know that the economy is going to change. We go through cycles, and we know that there's a cycle probably coming up where we'll see a big change again. And it will be interesting to see how technology, if it's able to sustain during that change or where it will go.
Yeah.
Well, and so what do you think, like in this area, for example? I mean, we've heard a number of other podcasters and other realtors and stuff talk about sort of a bubble bursting and things like that. And maybe that's the case, but like here in Salt Lake area, for example, I'm still seeing things that are saying, North Salt Lake, Bountiful, some of these neighborhoods we're looking in, they're still saying that they could, increase by 25% by next year by the time we're ready to shop again.
Yeah, we actually go to a breakfast every year where we listen to economists talk. Jordan attends those. Do you want to tell us what they've been saying?
Yeah, so we every year as a board of realtors, we go and listen to a national economist and also a local economist from the University of Utah. And every year they give us an up-to-date on the market as far as what they project the market's going to do. And they're pretty spot on just about every year. Over the past couple of years, they've told us the market's going to increase 9 to 11%, and that's pretty much where it's gone the last few years. In some areas more, in some areas a little bit less, depending on where you're at. This coming January, we'll hear the same economists talk about that. So we'll give you an update on that. But as far as what they project, a few things, especially Utah, we rebounded a lot faster than most states in the country when the recession happened. Also, what we have going for us is jobs. I mean, you can see all the buildings being built, especially over by in the Draper, Lehigh, Bluffdale area.
Silicon Slopes.
Yeah.
All the technology.
Well, it's grown so fast that they've finished the off ramp there, and they had to tear it down and redesign it because there's so much traffic there. It's ridiculous.
True.
So jobs being created, people from out of state moving in left and right. I mean, I do open houses almost on a weekly basis, and the majority of people coming to my open house are from California, New York, Washington, Oregon, out of state.
I'm from Seattle. Yeah. We have a guy that just moved here from New York in the office. Yep. It's spot on.
So to them, a $600,000 house, $700,000 house is nothing to what they, from where they came from.
Yeah, it's chump change for them.
So they are big proponents. They are one of the biggest reasons of why it is continuing to increase, because they are keeping the market going in the state. Interest rates have been relatively reasonable for the most part. And what Kelly was saying, that people have money. They have money, and they're starting to buy. Now, a couple of the unknowns that the economists have talked about. One are the millennial generation. What are they going to do? Are they going to continue to rent? They have high debt to income ratios. That's why they can't buy.
Like student loans are kind of a problem.
Student loans,
Yeah.
right? So it forces them to rent. They may have good jobs, good tech jobs, but their debt to income is too high.
Well, and is this, to Kelly's point earlier about sort of this instant gratification society or whatever, like, are people racking up crazy debt because everything is so accessible? I mean, you've got a good tech job, you're making a good living, it's easy to get credit. So you're blowing it on these short-term things when you're 24. And then when you're 29 and you're looking for a house, like, you're already, in the debt cycle, I guess.
Yeah. Well, and I heard an interesting statistic that more that the first time home buyer category is shrinking, meaning the new generation is jumping right past the first time home buyer price range right to the second home because they're getting married later, they're having children later, families later, they're pursuing their
So they're not building the equity in the first house
but they're making good money. They're renting maybe during that time period, making good money. So
And
they're
low money down loans are back, so they can do 0 down loans or 3% down loans, within certain parameters. But that, at least in Salt Lake, Utah area, that'll get them a house instead of like a smaller, first time home buyer condo.
Yeah, exactly. So that whole first time home buyer category is shrinking a little bit, and we're seeing people jumping right to the $500,000-$600,000 homes. So I thought that was an interesting statistic, and that tied into something you'd said. I'm sorry, you asked.
Oh, well, I was just talking about that sort of instant gratification
Yeah.
and people's ability to get money, things like that.
Yeah, the instant gratification thing. Yeah, that kind of plays into the new companies, some of the newer real estate theories about selling quickly and stuff. But definitely with the instant gratification thing, that's something that we were talking just on the way over here. How do we into that mindset with our marketing or with whatever we do? Because that's part of the millennial generation.
I think there's just a different
thinking.
mentality between Generation X and Y and the millennial generation, where the millennials, they kind of have a stereotype of, well, I don't want a yard. I don't want to take care of anything. I just want to go play and have fun and travel and do what I want.
Yeah.
So, but
You're seeing more lock and leave
yeah,
properties.
lock and leave,
Those are
townhomes,
becoming-
condos, kind of what you're seeing everywhere.
Yeah.
I mean, people are just building on top of buildings. And if you go out west, you can see just townhomes and condos and that. But again, going back to what I was saying, so a couple of the unknowns are, the millennials. What are they going to do? And if all of a sudden, if these millennials start buying, everything's going to go gangbusters, skyrocket. And the other unknown, which a lot of people think is Trump. That was one of their biggest concerns because he just got put in office. He's kind of a wild card. So one day it's great, one day it's not.
You never know.
Nobody knew what was going to happen. Economy's going great. People have money in their pocket. It's just that depending on what the mentality is of these millennials. If you're an investor, if you've bought properties, the rental market is awesome.
That's what I was going to ask you next. With the rise in the property pricing, it's almost, I don't know, because I'm not in that world, I haven't invested in property, but it almost seems like it's almost too expensive to get into an investment property because your mortgage and what you can actually feasibly rent it for are probably a wash. You're not getting any positive return on a monthly investment, unless maybe you get a duplex or something that's going to get 2 or 3 incomes coming from it. Are you seeing a lot of people still investing for investment purposes, or is it more people just buying for themselves?
Yeah, the majority of our business this past year was investors.
Really?
Because they have been sitting on some money. They've been using the equity out of their home. But the majority of our business this past year was an investor.
That's awesome.
Either for flipping homes, buying single family long-term investments, vacation rentals. Vacation rentals have become very popular in Utah in certain areas.
Like Airbnb,
like down in St. George,
Nightly
down in Hurricane,
rentals.
Moab.
Okay.
Nightly rental, kind of, you can rent your townhouse down there nightly, and then you can block it off and use it if you want for vacation. So it's been very popular. Now, the market has gone up to where some of these, like flipping, the margins are a lot narrower in certain price ranges. So it more of a diamond in a rough kind of type home.
And we're actually seeing the days on market have gone up year over year from October. So that makes it a little tougher to flip a home when you have carrying costs if you're not able to sell it as quickly and you've borrowed money. So as those things start to change, and that could be just partly due to the time of year, things definitely slow down in the real estate market in the winter time. Most people's homes look a lot prettier when they have flowers
green
rather
grass
than
and
5 feet of snow in
Curb appeal
front.
is real.
So,
yeah, but everybody that's come up and talked to us, the first thing they say, they associate us with real estate. How's the market? Then the next thing they ask is, what are interest rates? So basically, then they start asking us about lender questions. So that's what's nice about having someone like CJ in our pocket.
We call him at midnight if
we call him at midnight, and
Right.
you can imagine what Sunday dinner's like is around the Wilkinson family.
yeah.
So
all
when-
about real estate and loans.
Yeah. What's your lock time normally? Like, do you do 15 days or?
Yeah,
Yeah.
we can. Yeah, especially at Academy when everything's in house. We have the underwriter processing right there. We lend our own money. I mean, ultimately it goes to Fannie Mae and we get it back. But yeah, we can close loans in a couple weeks if we need to. We typically do a 30-day lock just because if there's a surprise or if the appraisal comes in low or if it takes some time to transfer their money out of an IRA into a savings account or checking account, then you want to give it time. But we can close them quick. If we need to.
That's cool.
One cool thing about investing. So a way a lot of people are getting into investment properties is they're vacating their current home, right? And they're buying another property owner occupied. So they get the owner occupied financing. They can do that low money down, zero down. They can get the good rates that come with owner occupied. And then they can rent out their home that they vacated and they can use the proposed rental income to help qualify for that next home, really to offset their mortgage payment. There was a time following the recession where that wasn't for the most part, it wasn't possible to do through your standard, Fannie Mae, Freddie Mac loans.
You couldn't count the income from the rental as actual income,
right?
And you actually had to have a reserve that showed that you could pay.
And you still have to have some reserves.
6 months. It was 6 months, I think, at the time.
Yeah, but if you couldn't
was vacant,
if you couldn't include the proposed rental income on the property that you're vacating, then you had to qualify as if you're going to carry two mortgages. So, if you had really low debt to income ratios or, earn a lot of money at work or whatever, then you can maybe pull it off. But now, most people can turn their current home into a rental property and buy the next one because the proposed rental income is going to basically cancel out the debt.
Interesting.
And our dad told us, you never sell your first house. You
just hold on to it.
Keep that house, you rent it out, and then that's the quickest and easiest way to become an investor is to keep that first house. You've already put the time, the closing costs, the energy into that.
Well, and it's your first house too, so you've probably spent some money in fixing it up and making it your kind of your thing, and so
it's just it's a jump start into real estate investing if you want to go that direction, or you just keep that as a retirement income. Eventually you pay it off and you've just got a great steady income from that, plus all the equity.
So on the contrast, if somebody was to purchase a property as an investment property, right, they're not going to move in, they're going to start renting it out right away. It requires quite a bit of money down. You can do it with as little as 15% down, but the terms aren't great on that. You've got to pay mortgage insurance and some pretty high rates. So if you get to 20, it's better. If you get to 25% down, that's where the terms get really palatable, where people can feel like they can offset their mortgage with the rent. So, putting 25% down on a property, that's a lot of money.
Yeah. Especially on a $500,000 loan or
right.
$600,000 loan. That's
So vacating your primary and buying a new primary residence is really the way to go.
Yeah, it seems like it. So I guess so that was one of the things we were thinking about. Like if this is kind of inside information, but I have a house in Idaho that might be coming back to me. And, our goal was to get rid of it and get out of Idaho and move just completely to Utah. But some, things could happen and it could end up back in our lap. And so we had decided to try and keep it as a rental, kind of like what you're talking about. But what we were afraid of is that it would hinder our ability to get into the next house because we needed some of that first-time home buyer equity.
Yeah.
And so how does that work? Like if you were trying to hang on to that house as a rental, but we'd like to, I guess, leverage it to get into something new. Yeah. How does that work?
Well, Jordan and I actually just did this scenario. So we moved this summer, and we had an idea that this is what we were going to want to do. Of course, I've got to take my dad's advice, right?
Sure.
And so we thought about this several years ahead, though, and we ended up refinancing our home so that we could get our rate as low as possible, knowing that we would be renting it out and kind of what the rents were. You want to finish the story there?
Yeah, so we refinanced, and it took us a little while to find what we really wanted. I mean, we always show homes to other people, so we're constantly looking. I'm on the internet, on the MLS all the time, looking at homes for other people. So it took us a little while to figure out kind of exactly what we wanted. And during my morning search of new homes on the market, this home popped up. But before that, other than refinancing our house, we did a home equity line of credit on the current house we own. So basically, that allows us to take a certain amount of money out of our equity and use that for our down payment.
Sure.
Okay.
So
the numbers have to work right. You have to be in a positive equity situation. But we went and talked to CJ, and he referred us to
right, some different home equity loan lenders, which we don't do at Academy, but so I know some good contacts for home equity loans, and they ended up getting one.
Yeah, and so I mean, if there's people out there considering, now is a time to do that when you do have that positive equity.
Okay, so like in a scenario like ours, we've owned this house for 14 years now, so we have a little bit of equity. There is a second mortgage on it that we had to take for some medical bills when we were young, and so that just is sort of this, I don't know, lump at the top of the loan that's going to walk away with 30K of our equity. But even at that, I think there's some money there. So the idea would maybe be, at least to sort of put it in terms of what you're talking about, might be take borrow that 40% or that 40K or 50K or whatever it is that's left, borrow it against that other house and use that as our down payment.
Yeah, you
versus selling the house, taking the equity, and then moving.
Yeah, you want to use your asset. You want to use the money that's available with that house. I mean, that's what it's there for.
And then let your renters pay down that debt.
Yeah. Okay. So you get a good renter in there that, you get a good rental income every month. They pay your mortgage and they pay the home equity line of credit every month.
If your numbers work
right.
as such.
Well, and that's kind of how it works for us right now. We, the person that's in it is basically paying our mortgage and paying our second. And so, but the second is the most ruthless loan we could get because we were 24 when we had to get it, and we had no money and no anything. And so, but we had to borrow. Our 10% of our kids' medical bills was 30 grand, and we still owe 30 grand because it's one of these horrible balloon payment, awful things. Interest. Yeah. So on our kid's 15th birthday, if this thing's not sold, we're like in real trouble. All of a sudden we've got to pay this stupid thing off. And so, anyway, so it's kind of a nightmare scenario, and it's a bummer because it hasn't been, taking advantage of this guy paying rent. Basically we're not gaining equity because of it.
Well, every situation is going to be different, and we always just send our clients, ask them to talk to someone like CJ. Usually, they meet with CJ and they see if the scenario can work for them. But we're seeing it happen a lot more because of the positive equity that a lot of our clients have. It's usually people that we sold a home to about 5 years ago, the ones that were brave enough to
now they have the equity built up where they can actually use
exactly.
it. So let's take a step back. The reason we have you here is for that meeting next Tuesday on the 11th, talking about networking and podcasting. And I noticed back when the market crashed and I was doing the loans, we were doing a lot of our business was just people calling us, wanting to refinance. We didn't really network with the realtors and the people to sustain us through, the crash, because new purchases and everything, we were focusing mainly on refis. What do you guys do as far as networking and marketing in the real estate world to generate leads and traffic for you?
Basically, as a realtor, you live and die by how often you market yourself. And that's, if one takeaway as a realtor is you need to market yourself.
Yes.
I mean, you have a brokerage you're under, you have a name, but the successful realtors that survive during times, good times and bad times, is that they market themselves and they're consistent. It's all about yourself and consistency. And along the lines of our marketing, it's evolved as this world right now with marketing is like buying technology. As soon as you buy a phone, your phone is outdated.
Right.
As soon as you start marketing a specific product, that product's outdated. Every year we've done movie events with our clients. We've done Easter egg hunts. We've done mailers. We've done all sorts of different marketing, but we've also had to evolve as the world's evolved.
Yeah. Do you do a lot of networking with other real estate agents to try and, because I'm sure, if someone's posting the house and someone's, buying the house, having that network between them, like, oh, I've got this great property. I've got a client looking for this. Does that really come into play, or is it more like
you recently did that group open house? That was.
So realtors, all good realtors want to work well and work with each other. A lot of the times we're kind of in a competing world, and we can't forget that, hey, we're in this together. We need to help each other sell. So last week we did a group, kind of like a mini Parade of Homes open house in the Cove area in Salt Lake.
Nice.
There was 12 other agents that have listings up in that area, and we just worked together, mass marketing, emails, mailers, with this mass open house, and we just sent all of the buyers, all the people that came to the home, to each other's homes, just to kind of help each other.
Oh, that's neat.
That's really cool.
And then through the power of technology and social media, 12 agents advertising one open house, it just expands the reach of who that open house got to, who learned about that.
Yeah, so you end up with a broader reach, more people showing up, and I'm sure that worked out to be good for all you guys. We were talking a little bit earlier about technology and the constant battle there. So back in the day, I guess your primary competition may have been, the guy up the street or the other realtor down the block or whatever who was trying to snipe your property or snipe your people. How do you guys deal with things like these new apps and stuff that are flying around, to, sort of appease these millennial generation guys? How do you sort of, I guess, keep the focus on personal relationships and the sort of important things in life versus just using an app to buy a house?
Yeah.
Seems like scary competition.
When I started when I was 15, you reminded me that all the listings were delivered to us in what looked like a phone book. And so realtors really were the only ones that had access to those listings. So if somebody wanted to buy a home, they had to get in contact with an agent, and we looked in the book and found.
So MLS wasn't even a thing.
No, the MLS wasn't a thing. It was very close. I'm not that old, but it was very close to coming to fruition. But when it finally did, I remember sitting in the office and everyone was going, "We're doomed. Everyone's going to have access to these listings. What is our purpose now?" And as you know, we're still around. So yeah. Realtors do have a purpose.
Well, I think the average consumer, the average person buying a house doesn't want to go down that road alone. Yeah. They want some help, someone to hold their hand. And
you're exactly right. When I talked to my dad about it, he says, "Kelly, this is the biggest purchase that most people will ever make in their lives. And I just don't see everybody wanting to do that over an app. Maybe there'll be some. Yeah. But realtors offer something that an app can't offer, and that is just personal knowledge about things. It's the experience. It's
well, you even can look at an existing neighborhood and know, like, oh, this neighborhood's a good one to be in.
Exactly.
This whereas me coming in from Seattle, I don't know Salt Lake. I don't know, like, I'd probably buy on the wrong area and the worst crime-ridden area in town and not even know it.
The good news is that'll be the hot area next week.
Right.
So anyway, we've had to focus on added value. Where's the added value with a realtor? And we feel like that's service, just service that is above and beyond expectations. Like Jordan talked about, we do these movie nights. We really want to make our clients know that we value them and that we value their referrals and just create a family. I was putting together our Christmas cards, and we send to clients and friends, and every one I was putting on, I was sending my own personal card along with our business card, because I see these people as friends,
as family almost. Yeah,
they're not just clients. And I think when you get into some of these brokerages now that are have a different philosophy, there's no way to create that type of relationship when you're working mostly through just technology. So
someone comes in and buys a house from you and it's a good experience and everything is, like it's turnkey, it's simple, the great people, they're likely going to use you again when they sell and when they buy their next house. And so it's important to keep those relationships going.
Yeah. So we really work on that relationship part, but technology is come into play in terms of keeping us front and center in front of our clients, because everyone leads busy lives and they're just going along. And if we aren't using technology, emails, we still do a lot of analog stuff, the newsletters, and things like that. But just keeping a presence on Facebook, keeping a presence through podcasting is going to be an excellent way to do that, just because your sphere of influence grows so much by linking with other people doing the same types of things. So other podcasters and promoting each other, other businesses promoting each other. We do a lot of work with CJ in group efforts so that we tap into his sphere of influence and his sphere, and then you can just see how it can grow exponentially.
It
when
really
you look at it
does.
from a sphere of influence point of view.
Let me weigh in on as far as people obtaining mortgages, like digitally or all online.
Yeah, because that's changed a lot.
Like,
too.
so the younger generation, they are very techy, right? So a lot of times they'll start there, and they'll even get pre-qualified online in 5 minutes or whatever they say they can do, and but they don't have a lot of confidence in that, and they don't learn anything in the process. So the younger generation, they love the technology, but they also want to learn. So they still feel apprehensive. And then if they ever do come, sit down with me in my office, and I teach them a little bit about why they qualify for how much they do, and what we're looking at, as far as the calculations go, and a little bit about what Fannie Mae and Freddie Mac actually are and where their loan's going to go, and then I lay out 7 or 8 different loan options for them and explain the components and explain the closing costs, and help them really determine what loan is going to be best for their goals and budget. They always have this kind of like aha moment of, okay, now I know what I'm getting into. So even though it can be quick and it can be easy, if they don't know what that's going to ultimately mean 30 years down the road on a 30-year mortgage, or
why you shouldn't get an adjustable rate mortgage, and why you shouldn't do this or that based on.
And people want to compare options, even if I know what option they're going to ultimately pick, because I can just kind of tell what's going to be best for them. I still show them multiple options so they can know why they're picking the one they're picking. They have to kind of know what they're not picking so they can know why they're picking the one they're picking. And then once they go through that process, they just feel way better. So the personal touch is still huge. It's just sometimes getting people to understand that. And sometimes they need to have the experience of not feeling that personal touch. Then they realize that's something they want. And then, we take it from there.
Are you seeing a lot of people switching from like the 30-year fixed rates to like a 15-year or even a 10-year? Is that more?
There's a little bit of that. I mean, people still want low payments. It's pretty rare that somebody wants a higher payment than they have to have, which comes with a 15 or a 10. But no, I'd say there's more of that. They're feeling a little more confident in the economy. Like Jordan was saying, job growth is strong. So if they feel good job security, then they might refinance to a 15 with a lower rate and a higher payment, and really try to, get their principal down quick and get the thing paid off.
Yeah, it's amazing how much you can just knock off in interest if you just make an extra $500 a month payment, or even $100 or $200 over the course of the loan. It really makes a huge difference. So,
well, and back to I think both Kelly said something, and CJ. I mean, that's education, right? And you don't get the education if you're using the app or whatever. I mean, the technology is great because it's a tool and it's really helpful to I guess for the consumer, at least in like my situation, for example. I mean, I'm able to jump online. I can look at all these houses. Jordan will share listings with me, and I can kind of take a look and weed out what I like versus what I don't like, and do all that stuff. And technology is facilitating that versus going to 24 houses that you guys just found in your little, yellow pages.
Yeah.
But so I mean, it's definitely improved the situation there, and it's become more of a tool. But I think, like you're saying, CJ, with the knowledge and having some understanding of what you're doing, this may be that most expensive purchase you've ever made. And if that is the case, then you should know something about it.
Well, and the other key to it is it's a very emotional decision. Home buying, people kind of forget that aspect of it, that
It's
a loan is a little bit more of a financial decision, but the home buying process, it's very emotional for people.
we're more therapists than real estate.
Right. Get a side degree.
Yeah, we've held a lot of people's hands through through things because it's tough, and this is where they're going to raise their the decisions are just much more than just
School
a financial
district,
one.
everything.
It's an emotional decision. As long as that's the case, I believe there'll always be a place for realtors to be a part of that emotional decision.
Well, that's the thing. I mean, we use Jordan mostly as a referee, me and my wife.
Yep.
So I mean,
I bring out
really
the boxing gloves.
We let him stand in between us because I want the the big concrete box with all the glass, and my wife wants the nice homey house where people can grow up, and and so we're constantly duking it out through every house we saw.
Yeah,
But,
and people forget
usually in good fun, but
it's a process. It is a process, and it's not only just
we call it a roller coaster a lot of the times because there's so many ups and downs. Part of it's the lending process, but yeah, it's a roller coaster.
I mean, you look at a picture of a house, and if you like the house basically sells itself, but it's the process in between you getting it under contract and closing. There's so many hands in the pot. There's so many different variables that can happen. When you think
so many personalities.
Yeah, when you think
together.
that this is going to be
working
a
with the
slam
title
dunk,
company,
easy
all
thing,
that stuff,
Appraisers,
Yeah.
title companies, insurance companies.
And if you think the buying is emotional, the seller, there's a lot of emotion on a sell. You can imagine.
Yeah, that makes
people
sense.
parting from their homes or someone criticizing their home. There's a lot of emotion there too.
Yeah.
Well, open houses and everything like that. I was in a situation. I had the perfect rental in Seattle. I loved it. I would still be there if what happened. My landlord foreclosed on the house, wasn't making his payments, and it was a mother-in-law kind of side thing. And when he foreclosed on it, all of a sudden I have real estate agents knocking on my door wanting to show my property. I'm like, I didn't sign up for this. What's going on here? And so he stopped making the garbage payment. He stopped making the electric.
So he was taking your rent money.
He was taking my rent money, keeping it, not paying his mortgage or anything. And so it turned into, I'm withholding my rent because you're not doing this. And then he sends me an email saying, hey, why is the rent not paid? Because the garbage hasn't been taken out, because the electric went out the other day. And it's just like, finally, I just packed up and left. I left a note on the door is what it came down to. I'm gone. I never heard from him again. So I hope there's, yeah, but it was rough.
So no one knocked and gave you offered cash for
no,
keys, huh?
No.
Too bad.
So, yeah, that would have been nice. But yeah. Well, anyways, thank you guys so much for coming in. I think we're getting close to that hour mark. Once again, we got Jordan and Kelly and CJ. And this Tuesday, the 11th, they're going to be coming in speaking at Access Salt Lake, 175 West, 200 South, from noon to 1. And come in and check it out. We're going to be doing an open house for the podcasting studio as well. So we'll be walking people through. So if you get some time, come check it out. And they are with Probe Realtors.
Yes,
correct?
Team Moving the Market at Probe Realtors.
Okay.
Yep. Do you guys have websites, anything like that you can share?
Yeah. teammovingthemarket.com is a great place to find us. And we're also on Facebook and Instagram, Moving the Market with Kelly. We offer tips, our events, everything there. So.
And CJ?
Yeah, just look me up, CJ Wilkinson Mortgage.
Perfect.
You'll see my Academy website, and you'll see my Google business listing, and you'll find me that way.
Perfect.
Cool. All right. Well, yeah, no, I guess with that, thanks so much for everything, guys. Really fun conversation. Nice to catch up with you guys. And we'll do it again sometime.
Thank you.
So,
yeah.
Thank you.
See everybody next week.